We got to get that Facebook tuned into the audio system somehow so they can hear our music, our theme music, man.
Well, this is a live stream, man. So they got to tune into the actual podcast.
Actually get
man. We're not putting on a show for the Facebook Livers, man. We love them, but nah, man. Yeah, we're doing this for Tashia Mayberry.
Yeah, big shout out to Tashia Mayberry, who put a little something in the contribution plate. So we greatly appreciate you, ma'am. Thank you so much for your support.
Absolutely. And what's going on, B? How you doing today, man?
Man, I'm holiday season, man. We're I say we're all in, right?
Yep.
Huh?
Yes, we are.
Everybody's all in. Thanksgiving's under. We got that under our belts. So now we're moving into the holiday season.
This is your season, man.
Oh yeah, man. It starts at October 31st, brother. It starts.
Right.
So, yeah, I'm excited. So yeah, I got a birthday.
Yep.
Done. A lot, man. So just focusing on 2020. Trying to get our coaching clients, everyone focused and gearing towards what our goals are in 2020, man. So it's just an exciting time.
Exactly.
Good time to reflect. We all know, for me personally, these are really, interesting times for me because
right.
5 or 6 years ago, this is when I found out during the season when I had a brain tumor. So Christmas Eve. So it's always, being thankful and a time for reflection for me as well, so that was probably the worst Christmas, Christmas Eve, and how much Christmas means to me, but to be that particular time in 2012 to be spending it in a hospital, being diagnosed with a brain tumor, those were some trying times. Began the beginning of a long period of trying time. So yeah, the season is extra special to me. So
absolutely, man. And this is the 5-year anniversary of
5 or 6.
5 or 6.
Yeah. 2012. So I don't know if the math is it. What are we coming up on? So
yeah, coming up on 2020, 2019. So
yep. So we're coming up on 6 years.
Yep.
So this will be the 6th year that Yeah. But it's, when you think about it, it's like I can remember everything, smells, sounds.
Yeah.
It's like it was yesterday. So yeah, man, it's the holiday season means, it always meant something to me, but it means that much more when you factor that in, and then you factor, I have kids now, so
exactly.
That are really understanding the holiday season. Like we're looking forward to Charlie Brown's Christmas. Every night there's the Grinch.
Right.
There's been something every night for us to to get immersed in. So yeah, we love it. We have our matching holiday pajamas.
Absolutely.
So yeah, we're all in. So it's just a special time. But
I saw the Star Wars cake, man. That was awesome.
Oh yeah. Big shout out to my wife Lacey. She knows I'm a huge Star Wars fan. Can't wait to get there.
Yep.
And be on the new ride in a couple of weeks.
Yeah.
So, to tour that whole, Star Wars scene. So, everyone knows I'm a huge Star Wars fan. So, absolutely, man. I'm so excited. And that was a great cake. It was a great look by the wife.
Yep. Absolutely, man. Well, once again, happy birthday, brother, man. And
thank you, sir.
We're grateful that you're here. We're sowing these seeds of knowledge. And this is the 11th episode of our podcast, man, which is fantastic. We every week we're just seeing more and more
growth.
People, growth. We got people reaching out to us via the internet, people reaching out to us on YouTube, which is phenomenal. And thank you to the supporters as well. We can't really keep this going without you guys, so we really appreciate you listening. And thank you for all your support.
Absolutely, thank you.
Today, I wanted to talk about a really powerful part of your book, Buy It, Rent It, Profit. This is chapter 4, and it's where should I buy rental property? And we want to talk about, the prospective tenants, understanding the prospective tenants and value. And in your book, there was a story about a student named Anthony. He was like really eager to buy his first property. He read some books and went out and just bought this single family home. Next thing you know, he came to you and he was crying or he was near tears, that the property was about to be foreclosed. And after looking at it, there really wasn't value in the home. And so when, traveling around with you and hearing you teach, you have a really interesting take on learning about prospective tenants. And I wanted to get from you, why is it important to evaluate prospective tenants? Why does that translate to value in rental properties?
Yeah. So prospect tenants, the training ultimately, in my understanding of how to evaluate prospect tenants obviously comes from my background in the multifamily industry. So the extensive amount of training I received, as a leasing professional, because I started out, and that's, one of the benefits of being, developing this brand and having these books and I've been doing this from, for almost 20 years now. I started out leasing apartments, so there's not anything that I haven't done in this industry, leasing, management, acquisitions. So my understanding of the importance of it, came from not only leasing, but then moving into the roles of management and really understanding that everything we did, and then getting into the acquisition specialist role, understanding that everything we did on evaluating properties and economic conditions revolved around a demographic profile of a prospect tenant, and then going out and finding properties that fit that particular, some people call them avatars.
Okay.
That particular avatar's needs. So you identify your prospect tenant / avatar.
Right.
And then you go out and find properties that fit those particular needs.
Okay.
And then you also understand, when you have that particular individual in mind, what sort of economic conditions might, affect that individual. So you know what type of properties, whether it's a C+, C-, B property, whatever it may be, A property, A+ property, you kind of know, how to forecast.
Right.
Because a blanket forecast doesn't make sense for everyone. So for someone to say, well, we're going to have a softening in the market, our unemployment rates are at an all-time high. Unemployment rates for whom?
Right.
Middle class? Low income? For some people, a recession is not hitting everyone. There are certain tax brackets where a recession is not necessarily, our employment, is
Very
not
true.
really,
Yep.
It's not a softening market. So,
Right.
At the end of the day, for someone to just say, oh no, we're coming into a recession, or no, unemployment rates are really high. For what demographic? For what, are those key metrics pointing to your particular prospect tenant's demographic? And if they are, then you have to kind of figure out how to weather for that storm and, so on and so forth. But, in downtown St. Pete, when you're talking about a recession, you might not be talking about our high unemployment rates in a certain area, even though this is not the case in Florida right now. But in downtown St. Pete, you might not be talking about the demographic, the young professional that works at the hospital, young professional that works in the financial markets, in the downtown St. Pete market. You may not, you may not be talking about that individual.
Right.
However, you might be talking about, certain, service industry, so you have to understand, again, really who your prospect tenant is, so you might see a slowdown in your service industry traffic, but your young professionals or your student traffic might not slow down at all. So you just really have to understand, when you're giving, when individuals give these blanket statements about the economy or the market, who are they really speaking to? And, is it applicable to where you're investing?
Right. No, that makes perfect sense. I like the analogy that you put in your book about Walmarts. Could you share a little bit more about that? So how you evaluate the different Walmarts in different areas?
Oh, yeah. So, this is something that is natural to someone that came up in the multifamily industry. So doing extensive background checks, again, it's called a COTA process, strategic evaluation of a target area.
Okay.
And what does that mean? That means, there's a team that's evaluating building permit activity, household income, average household size, demographics, psychographics. Demographics tells you who your prospect tenant is. Psychographics will tell you the why.
Right.
There's certain whys. Why they buy, why they gravitate towards this type of floor plan or these type of colors, so on and so forth. Wood floors versus ceramic tile, whatever it may be.
Right.
The why. But yeah, Walmart, before they build the super Walmart, they've already visited your particular town or neighborhood, and they've probably been there. If you watch, you can probably YouTube this, but there was a CNBC special on how Walmart goes about building these big super Walmarts
Right.
in your town, in your neighborhood, and they're there, they're visiting you years in advance, and
Right.
you have no clue. There's these large teams that come there and evaluate the town, and they're evaluating the economy and things of that nature, and they're extracting all this information and bringing it back, and then they make the decision on where they want to actually build the Walmart. And that's really no difference than what was done in the multifamily industry that I took part in as an acquisition specialist. Is you have these teams. Some are bringing back economic data. Some are will bring back specific data on unemployment, jobs, forecasting that as well. Some will come back on, the reports on the actual local government.
Right.
So you come in, and when you have this, it's a war room, and everybody's coming in and bringing in this information, and then you make decisions based on, what type of assets you feel are going to be the most responsive, to your model, and what type of returns you're looking to get. What prospect tenant are you going to actually go? Are you going to go after C-class property, C+, C-? There was a time where people, really only looked at
Right.
stuff in the lower income neighborhoods because that's where the values were. You know what I mean? So at the end, and I was a part of a lot of those teams. Now you look at, people are looking at value add at the B and B plus asset types. But again, you're compiling all this information. We call it a COTA in the book,
Right.
and then you make your decisions based on this information. On what type of asset class you're going to acquire.
Well, I think that's a good leadway into asset classes. So, that's the next part of your book. From learning about your prospective tenants, you actually go into knowing your asset classes. For the listeners, they may have just picked up your book. They may not actually understand the difference in asset classes. Could you break down the difference in the asset classes and what are the differences between them?
Yeah. So you have your A and A plus, which is, luxury,
Yeah.
high end. And typically that kind of product is the new development you see all over downtown St. Pete, downtown Tampa. All this new development you see is considered Class A. Can't really necessarily build Class B property
Right.
because of the cost of construction. But then that's the next tier, which is B property. So it's, it's semi-luxury, still can find it in core markets. Then you have your C plus, which is middle income. And then, that C minus product is getting into that, sometimes that public housing,
Right.
The choice voucher, Section 8 program type, choice voucher. You might see some of that in the C minus. And then you have D, which is, really rough neighborhoods, transient neighborhoods, things of that nature. But yeah, those are your typical asset classes. And again, really understanding where and what understanding your asset classes helps you really, and knowing who your prospect tenant's demographic is really helps you paint that picture of, how feasible your project really is in a certain environment.
Right. You said in the book that ultimately this understanding your asset classes plays a large role in determining your future tenants. So understanding your prospective tenant actually plays a large role in determining your future tenants. So, people get out there and they're just looking at cap rates or just thinking it's a good deal.
Yeah, that's crazy.
Yeah.
When you just a blanket, or I'm only looking for investment at a certain cap rate or a certain, it's you can tell the level of sophistication just by listening to certain people. But at the end of the day, I'm not going to make a statement like that because I have no clue. I might, if there's an opportunity in the core market, then I'm going to expect a lower cap rate.
Right.
Because I feel like I'm going to get more on the appreciable side, and I'm paying for the project to be less volatile.
Right.
So I expect a lower cap rate. If I can reach certain goals and certain hurdles, like what we're doing in Park Plaza, I'm not looking for high returns in a core market in downtown. I'm just looking for something that's less volatile, that's going to be more efficient at getting the investors their money back. So the IR, which measures the efficiency from which an investor receives their money back. It's really understanding and going another layer than just saying, hey, look, a blanket statement, I'm looking for a certain cap rate. I mean, aren't we all? But but ultimately you have to really understand, if you're in a core market, you're going to find lower cap rates, and then higher cap rates should you should, a higher cap rate is you should have higher returns when you're investing in more transient neighborhoods.
Mm-hmm.
You know what I mean? So those type of investments should yield a much higher return because there's much more risk involved with a lot of those projects.
Right. No, that makes perfect sense, man. So what else are you working on this week, man? What else do you have going on that you'd love to share with our listeners? I know we just had a great coaching call through the Multifamily Matrix, man. As you're starting to, listen to these podcasts and you're learning multifamily, we'd love to invite you to the Matrix. What else do you have to share, Bryan?
We're always working on deals. I mean, deal flow is what we're trying to ramp up more, get that pipeline opened up a little bit more. So I'm always looking for opportunities and deals. Yep. So if there's individuals listening right now and they have deals, please, we have cash. So, we will buy an apartment building and we have cash. Bring your deals. Join us in the Matrix. If you're really wanting to learn, we've got a great coaching program now. The Multifamily Matrix. Of course, we'll be hosting our events. The venue to be announced, but we're going to be hosting our apartment social events starting at the end of January. So come out, rub elbows with some of the elite of the elite. And man, I mean, those are some of the things. Then our certification course. Our one-day conference will be, I think we have a date. No,
May 30th.
May 30th. So our conference. So if you're looking to get certified in asset management, property management, financial analysis, underwriting, if you're looking to get certified in all those, you want to come out and take our one-day conference, which is a certification called CRIS, Certified Rental Investment Specialist, where we're going to really certify in all those key areas of property management, asset management, apartment underwriting, financial analysis, market analysis, the whole nine you're going to learn. And, myself, Mark Willis, CEO of KW, former CEO of Keller Williams, will be there. Brandon, our partner in MBB Park Plaza, Brandon will be there. You will be there. We're going to have some special guests, but it's going to be the elite of the elite and individuals that are going to, really looking to step their level up in 2020.
Absolutely. And you can learn more about this at bryanchavis.com. Make sure you go to bryanchavis.com to learn about all our events, all of our training, all of our education. We, once again, really want to help you to own multifamily in 2020. So make sure you guys, grab the book, buy it, rent it, profit. Like and subscribe to our podcast and please leave reviews. As you leave reviews, it helps us to get our message out to more and more listeners. And once again, thank you so much to the sponsors as well. We really, really appreciate that, and it helps us to keep this podcast going. So we are very grateful for you. And make sure you reach out to us online as well. We'd love to give you a free consultation for your sponsorship. So thank you so much. And B, once again, man, thank you so much for joining me, bro. It's always a pleasure, man.
Absolutely, man. Are we doing any more 30-minute coaching calls as well?
Absolutely.
I thought we're opening that up too any of our owners. Any of our owners out there. So if you have an apartment building and you're stressed, or you're wanting some free consultation, please reach out to us. I think we'll even be developing a special portal for you all to reach out to us and schedule times to be able to talk with myself personally. So that's something. Apartment rescue.
Yep.
That is something that we're launching in 2020. So if you have an apartment building, it has to be 5 units or greater.
Right.
5 units or greater. If you have issues, you're wanting to ramp up operations on your property, please reach out to us, Apartment Rescue. You'll have a tab here in probably the next couple of weeks, but that's something exciting that's coming in 2020. Anything else, Nate, that I missed? I know Nathan is the guy behind the scenes, everybody.
Absolutely.
That is the wizard behind the scenes putting everything together. But
make sure you just get locked into bryanchavis.com for everything. You're going to learn about our coaching, our consulting, Apartment Rescue, our events. You just want to make sure you go to our page and subscribe.
Please subscribe, especially all you bums, my friends and family. Yeah, I'm putting you on blast. All my Facebook people, please go and subscribe to the podcast. Please support. Please support what we're doing here. If you really greatly appreciate the information that we're providing, just please get out there and share it and support and write us a review. So that we greatly appreciate that. And a special shout out to, what was the young lady's name? I just want to make sure. I think we mentioned
Tashia Mayberry.
Miss Mayberry. Thank you. She actually donated and donated a monthly contribution
to our podcast,
so we can keep things going and add more value. Greatly appreciate it, and just want to highlight her and thank her for her contribution. We greatly appreciate it, man. And yeah.
All right, B. Hey, thank you so much for joining me, man. Look forward to speaking with you next week, brother.
See you next week, bro.
Take care.
All right.